Sorry, I seem to have lost my connection. I hope you can all see and hear me.
I can.
Excellent. All right. Thank you. Oh, everybody else is muted. Yeah. So I was just introducing Charity. Charity is a tax and legal and management professional. She has a proclivity for connecting with people and delivering tailored solutions and resolving contentious matters. She's an ardent supporter of innovation, specifically in the tech law space, and yeah, dedicated to people improvement. So we're really excited to have her here on the call, and she'll be sharing with us her expertise on matters digital tax today. So Charity, welcome.
Thank you, Lorraine.
Thank you so much for your time. So I think we'll just jump right in.
Okay.
And just start with explaining, like, what is this digital tax?
Okay. Just to take you back, this is not a new conversation in this field. It's a conversation that has been ongoing. The OECD has been having a conversation about it. There's the ATAF that has also been talking about it. We've had a few African countries even enact legislation towards it. So we're not the first per se. But in Kenya, the Finance Act 2019 is the one that first mentioned it. And then it was enacted in the Finance Act 2020. And this digital service tax is supposed to be the tax that is payable on any income that is derived in or accrued in Kenya from services that are offered through a digital marketplace. So what they're pretty much trying to do is bring under the ambit of taxation these services that are offered through the digital marketplace that are previously not being taxed.
Uh-huh. So basically, when we talk about a digital market space, we are saying everything like online. For as long as you're transacting online, you're subject to it. Eh?
So a digital marketplace now would be that platform. So for example, if you have any platform that enables an interactions between people who are buying goods and people who are selling goods or services, and this is via an electronic means, then that comes under the ambit of the definition of what a digital marketplace is.
Uh-huh. All right. So when like here in Kenya, when does that start? When do we start being taxed for this?
So the effective date, when the legislation on digital service tax became actually effective in Kenya, was the 1st of January. So it's the beginning of this year, 2021. So on the first day of this year was the effective date of this tax.
All right. Okay. And how much are people paying? Like, what is that figure?
So the rate of that digital service tax would be 1.5% of the gross transaction value. Perhaps I could elaborate on that. When we say 1.5% of the gross transactional value, this varies depending on whether it's a digital service or you're talking about the digital marketplace. So in the case of a digital marketplace, we expect the person to be charging a commission or some sort of fee for the use of that platform. So it would be 1.5% of that commission or 1.5% of the fee that is paid for the use of the platform. If we're talking about the digital services, in this case, you would expect payment to be made as consideration for those services. So it would be 1.5% of the payment that is received.
Uh-huh. Mm-hmm. So when we talk about digital services and a digital marketplace, so and you can correct me if I'm wrong, but a digital services would be, for example, if I'm an influencer and somebody is paying me to talk about their brand, then I've offered them a digital service because I'm talking about it online. So they'll be paying me, and I would pay 1.5 of the total amount that they pay me for this service that I've given.
I wouldn't want to look at it like that, because I would prefer we go with like what the regulations are specifically talk about. So for example, when they talk about like what is the scope of these taxable services, they'd say downloadable digital content would be one example. They'd say provision of that digital marketplace. So that's the platform. They'd say that's another example. They'd say subscription-based media. So for example, if you're subscribing for magazines, that falls under still those taxable services. Streaming services of films, music falls under there, even podcasts. Electronic data management, ticket booking, search engines, for example, people now who use that data, help desk services. I believe there's also online distance training, e-learnings. So, and any other services, if you think of a digital marketplace and you think of services that may be provided under such a platform, those are the services that we would be referring to.
All right, so that's clear. So if I'm streaming on YouTube, I'm getting revenue from YouTube. I'll be paying 1.5. YouTube will be paying 1.5.
YouTube as the platform will be,
yeah. All right. That makes sense. I think that answers how that works, how it works, right? And so who are the people who are affected? I know, yes, you've talked about it a little, you've touched on it, but can we like kind of just go into who are the people who are affected?
Okay, so maybe we could approach that question by looking at who is responsible for the payment of this digital service tax, and it could either be a resident person or a non-resident person, depending on whether it could actually be either a resident or non-resident. So you could have a digital service provider or a digital marketplace provider who is resident or one who's not resident. So for example, in the case of a digital market provider who is non-resident, then in that case, they may have to appoint a tax representative. This is for a non-resident person who doesn't have a permanent establishment in Kenya. So he can appoint a tax representative, and that would be the person who would take care of that for him. For someone who's resident in Kenya, then they would do it themselves. So what they can use is the iTax platform. So for example, for non-residents, for example, there's a simplified tax registration framework under the iTax portal. So all these people should be able to go onto iTax, register for the same. For the non-residents, they would register for the simplified registration process. And either them or their tax representative. And then once they've registered, then they should be able to now account for that digital service tax there. So it's something that should be available on the iTax platform that is currently the platform where the other tax returns are being filed.
All right. So that means that if I am sitting in, say, Germany or whichever other country that's not Kenya, and I'm selling to Kenyans educational material online, then that means that I need to pay digital services tax to KRA.
So assuming you're in Germany and you're running a platform, and it is derived, there's income that's being accrued or derived from Kenya, then yes, you should possibly appoint a tax representative in Kenya who would now go onto the platform, register you, and then you should be able now to file your returns.
All right. So it seems okay. So it seems like it's a very personal thing. What if I don't pay? What happens? Like how would they know?
Okay. So like with any other tax, there are penalties and that you will be subjected to for failure of accounting for tax. So in this case, there would be two kinds of penalties. There's a penalty for failing to submit the return by the due date. I don't think we've talked about the due date, but the due date would be now the 20th of the next month, following the month on which you provided the service. So for failing to file that DST return by the due date, you would be liable to 5% of the tax that you should have paid. So the tax due, you'd have to pay 5% of that tax. Then there's failure to now pay the actual tax by the due date. So in that case, also, if you fail to pay that tax, you're also liable to pay a penalty of 5% of the unpaid tax. And let's not forget that there's also interest, which is at 1%. That's usually charged per month on any unpaid tax.
All right, all right.
Yeah.
So what I'm hearing you say also is that by 20th of February, we should have already started paying for January's digital revenue, so to speak.
That's correct. So this would be the first deadline. So the first deadline would be the 20th of February, 2021, because it's due on a monthly basis. So as long as you pay on or before the 20th of February, 2021 for January income, then you should be okay.
Okay. So here I pay VAT. Am I going to pay digital tax over and above VAT?
So this 1.5% of the gross transaction value, this is exclusive of VAT. So whenever you're paying digital tax, you're looking at the gross transaction value. So you don't factor in the VAT.
Mm-hmm. All right. And is this charged also over and above withholding tax for like consultants?
So for digital service tax, what we understand is that it does not apply to income that has already been subjected to withholding tax. So as long as for example, if you had provided whatever income you had, whatever service you had provided, and it was subject to withholding tax, then it shall not, digital service tax shall not apply to such income.
Okay, so we have a question here. If I sell goods online, will digital tax will it apply?
So that's why you asked this question, I believe, in the first one.
Yes.
So what we're trying to say is that it is applicable to digital services. So you have to talk about goods that are sold on digital or social media platforms. Mm-hmm. So in that case, the suppliers are required to declare the income.
Yes.
And under a self-tax assessment regime. Okay. And the whole other list of taxable services that I had talked to you about. For example, the streaming.
Yes.
Earnings.
All right, all right. So yeah, I think for the most part, so what we had done, mm-hmm. So I was just looking at it. So like when people have an e-commerce platform, mm-hmm. This means that they need to factor in 1.5% on their e-commerce platform whenever they are charging, whether or not they're pushing it to their customer or they're paying it behind the scenes. It's something that they need to consider as you set up an e-commerce platform and using like shoppable social media.
Yes, that's correct. That's something they do have to consider. Whether or not they will push it down to their customer is, I think, a call for them. Like it's an internal decision in their case. But yes, it is a factor that they have to consider. There's been talks about whether this will discourage online trading, all these online businesses. There's been talks about whether this DST will discourage that. I guess all we can say for right now is let's see how it goes. Yeah.
Yeah, it should be interesting.
Yeah.
So there's a question, would a marketplace that's only doing linkages liable to pay DST? I'm not sure what linkages means. Perhaps you can elaborate.
I'm not sure what linkages means either.
Yeah.
But let the guide, let me just point out that the guide should be exactly what the legislation says right now. Mm-hmm. There's room for development of this legislation. And even when KRA was enacting it, the initial target market largely is those large, those big organizations that, they make substantial money from Kenya. So that's where they're coming from. They're starting off there. Of course, it'll trickle down to everyone who's actually providing a service, because that's who it's targeted towards. But they're starting, of course, with the bigger people. That of course, I imagine that would be their focus. But so for now, I'd say let's restrict ourselves to what the regulations guide as the scope for what taxable services are. Because it's still a relatively new legislation, especially in Kenya, there's room for development, there's room for expansions of definition and reduction in what a social media platform is or what a digital service is. So there'll be, because this is the first time, so it's still maybe a bit, do I say, hazy or not so clear. But with time, there shall be legislation that shall, extra legislation perhaps, that shall be passed, or there shall be case law that shall now guide who is taxable and who is not taxable. So because it's relatively new, I'd say let's keep watch. Let's see how it develops, because there will certainly be developments.
Yeah. So what they've come back to say, like a free service or something where there's no commission. So essentially, like, for example, the way we've had this webinar, we've sold tickets and it's free. So this is basically 1.5% of 0 is 0, or?
Yeah. So, okay, you see, for digital service tax, if you look at what it actually is, it's payable on income that is derived or accrued. So if there's no income,
there's nothing to pay.
There's nothing to pay, yeah.
Yeah. All right. So it says, is digital tax a final tax in itself, or is it deductible against corporation tax as with withholding tax on income?
Okay, so as to whether or not it is a final tax depends on whether you are a resident or a non-resident. So for resident digital service providers, digital service tax will be considered an advanced tax. So this means that at the point of filing your annual tax return, you can be able to offset the digital service tax that you've paid during the year from the total tax that is due at the end of the year. However, for a non-resident digital service provider, it will be a final tax.
All right. Yeah. Okay, I hope that answers the question. So yeah, I think to a great extent we've answered a lot of the questions.
Okay.
So just trying to figure out if there's something that's still in the gray area, and we've made good time because yeah, we hoped to finish in like half an hour.
An hour, yeah.
And yes.
Okay. What about from a marketing point of view? How does this affect you?
So I think what we are expecting to see once this is implemented is that, okay, so already as it stands right now, digital advertising is one of the cheapest forms of advertising. Advertising online, social media, search engines, etc. So now once this like fully comes into play, and it's funny because as at now we've not seen like many changes happening in terms of the cost, but once this comes into play, we expect that we'll see the prices of advertising going up a little if YouTube and all these other platforms, Google, Facebook, push this cost back to us, or if they're going to push it to advertisers. So we expect that some costs are going to go a little bit higher, but I think digital at the end of the day is still going to remain competitive. Now, I think the space that we are wondering how things will go is how is this going to reduce the number of influencers and content creators? You know, what happens if you change your VPN? I mean, there's so many things that, you know, things that we don't know whether KRA will be able to see. And we're wondering how this is going to affect how we do returns. So there are places where there'll be visibility, like on YouTube, you have your revenue place, but some people choose not to generate revenue from their videos. So it will be interesting. It feels like it's going to be a space where people have to be honest, and KRA will just have to trust that that we are giving what we are actually making.
Okay. Well, I'd say let's wait. Let's wait, see what the developments will be. There'll definitely be more developments in the field, because they'll definitely have to look at a commercial perspective, even when they're setting the legislation or saying that this should be done or this should not be done. Yeah, let's be positive about it and see what turns out.
Yeah.
Yeah.
I have a question here.
And,
I think maybe when I read it out loud, it'll make more sense to me. But it says, with reference to how VAT is handled, is DST also twofold, whereby there's input DST and output DST, then net is paid to KRA. I'm not sure what that means.
I'm not sure what that means either. I know VAT operates like that. There's input VAT and output VAT. With regard to digital service tax, you're literally just collecting the income that is coming from the provision of those services and submitting that to the revenue authority.
So it acts very much like withholding tax, so to speak.
Yeah, it's more of, it's an income tax. It's not a VAT tax.
All right, okay. Yeah, it's definitely a space to watch. I'm curious to see, because like I've had people hesitant to now start doing e-commerce because they are going to have to pay this tax. So it's putting people off. And then there's now the question of whether, I mean, it's a very interesting space. So should they go online or not? Are they going to push the cost to the consumer? Is the consumer willing to pay for this? But I think also from now a marketing standpoint, there is that angle of people are willing to pay for convenience, and that's the online shopper. They're always willing to pay for convenience.
And I don't, just from like, if you just look at it from a global or rather an African perspective, like, okay, yes, Kenya is charging 1.5%, but we have other countries, for example, that have slightly higher rates. You'd see 3%, you'd see 5%. But again, maybe it's because it's introductory. Maybe the rate will eventually go up or something. But well, it's a start. And yes, there's lots of questions and what's going to happen to business. But I doubt the KRA would just proceed with and enact legislation without considering the commercial environment. So I do think this is something they will look into. I do think further clarity and who's covered and who's not covered will come with time.
Yeah.
Yeah.
So we can expect to see this conversation growing after
this is definitely a growing conversation. In fact, right now, I think, I don't know. I mean, I reckon the COVID environment probably, made us want to look into this income more, because now more people are just doing everything online, so there's more income that is being made online. So, but though this was already a wheel that had started rolling, I mean, globally, we had already been going towards a digital environment. It's just that I guess COVID sped things up, so to speak. So it is something that is definitely going to grow, because we will keep doing more things online, and even should COVID end, this will still continue. So I don't know, I foresee it becoming a bigger area.
Yeah, I think I definitely agree, because what I've seen also, like initially towards just before COVID hit hard, let me say hit hard, what was happening was we didn't have like online, the shoppable social media. Facebook shops, Instagram shops. It was a slow release. So suddenly they accelerated this. Something like Google My Business was only available to brick and mortar stores. Suddenly they opened it up to online. So I think there's now a huge focus because many people are going to start shifting to trading online because it's almost a sure way, or it's a surer way of reaching your customer than it would physically these days.
Yeah.
It will be interesting to see also how this tax reaches the global market properly, because I don't know, I've not seen so many like internationals actually talking about it in this space, and it's probably something I can do some listening on, see how that conversation is going. But it's interesting to see.
It's definitely a global conversation. The OECD has had it.
Yeah.
This African Trade Organization, ATAF, is having it. So there's African Tax Organization rather is having it. It's a global conversation. They started way back, in fact. So it's not a new topic per se.
Yeah.
But we're instituting legislation in Kenya right now. But there are countries that have had legislation.
Yeah.
Mm.
Yeah, I think it's strange. Like now we pay for say Google email, if or Microsoft email, whichever platform it is you're using, you're paying for it, and under taxes it's still zero. So I'm just waiting to see how soon this starts coming before. Yeah, interesting. It'll be an interesting space to watch. Yeah. All right, so I think we've covered everything for the most part. We've answered all the questions that are there. Yeah. I think we've done a good job in terms of, at least I feel like I understand it better. I hope everybody feels the same. So if there's nothing, no, oh, sorry, you have a comment. Let me just share. 1.5% or 3% tax is very low. I agree that the market environment is changing to digital everywhere. Introducing it is just widening the tax bracket to include more participants. Yeah. Yeah, it's a great.
The carrier would definitely agree with you with that sentiment.
Yeah.
Yes, I mean, I believe the carrier's view would be that everyone else, every other service provider, everyone else who's making income in Kenya pretty much is paying tax. So why should you, who's making tax in Kenya, just because you're on an online platform, why should you not pay tax?
Yeah.
I believe that would be their reasoning. So
yeah. All right. So yeah, I think as we bring this session to an end, I've launched a poll. Just let us know how we did. If you guys would like to see another similar webinar, if you have any specific topics, you can always write into us, and we will share with you. We will have these more of these sessions. There's a question. Are there any ways to avoid this tax legally? This one.
Let's just say you wouldn't want to be in Kerry's bad books. Let's just follow the legislation.
Yeah.
Yeah. But for tax structuring advice for how to structure your transactions in a more tax effective way, efficient way, we could talk about that.
Yeah.
I mean, that's definitely there, that you're allowed to do that.
So what we'll do is at the end of this session also, we'll share with you Charity's LinkedIn as well, so you can connect with her. And if you have any questions in regard to tax and doing things legally, you can always post them to her. I hope you're agreeable. I'm just saying this, and
yeah, that's fine. That's fine.
Yes, we'll share with you. All right. So if there's nothing else, thank you all for attending, and yeah, we hope to see you again in our next session.
Thank you all.
Thank you, Charity.
Thank you to Lorraine.
All right. Okay.